The Bank of Japan's large-scale quantitative easing policy has reached a major turning point. The Bank of Japan (BOJ), which has always maintained an easing monetary policy, began raising interest rates for the first time in 17 years. The negative interest rate policy that had been in place since February 2016 was also repeated. It was judged that deflation, a chronic problem in Japan, was over. The negative interest rate policy is a method of applying a short-term policy interest rate of minus 0.1% current account policy balance interest rates when a bank entrusts money to the central bank. The background to Japan's decision to raise interest rates for the first time in 17 years is a significant wage increase. The average wage increase rate at large companies this year was 5.28%, the highest in 33 years. It was judged that an environment created to raise interest rates as real wages were rising higher than the consumer price inflation rate, which was in the 2% range. The Bank of Japan's Monetary Policy Committee held a two-day meeting starting on March 18th and decided to increase the policy interest rates from the current minus 0.1% to 0.1%. The Bank of Japan's position is that a virtuous cycle of rising prices and rising wages had been confirmed, with prices stable at around 2% and wages rising to fill consumers' wallets. The economy was judged to have entered a recovery phase. Japan's consumer price index, excluding fresh food, rose 3.1% in 2023, reaching the highest level since 1982. In addition, the average wage increase rate and major companies recently calculated by Rengo Confederation of Japanese Trade Unions, Japan's largest labor union organization, reached 5.28%. The YCC policy, which was measured to suppress a long-term interest rates, and the ETF purchase policy, which was an artificial stock price stimulus measure, will all be terminated. The difference in interest rates between the United States and Japan was cited as the reason for the weakening yen. But despite the Bank of Japan's interest rate hike on this day, the value of the yen actually fell. Although the Bank of Japan lifted its negative interest rate policy, the movement to buy dollars temporarily became dominant, as it was predicted that the interest rate gap between the United States and Japan would continue to remain large. As of 1:50 p.m., the yen versus dollar exchange rate recorded 150 yen 1 cent per dollar, breaking the psychological marginal line of 150 yen again for the first time in about 2 weeks. The yen-dollar exchange rate was recently staying in the low 149 yen range. The Bank of Japan also decided to abolish yield curve control (YCC), which was part of its financial easing policy, and to stop purchasing exchange-traded funds, ETFs, and Japan Real Estate Investment Trust (J-LITE). ETF and J-LITE purchases, which began to 2010, were actively carried out during the tenure of former Bank of Japan Governor Hirohiko Kuroda, who strongly promoted financial easing while supporting former Prime Minister Shinzo Abe's economic policy. Abenomics. The market value of ETFs held by the Bank of Japan in September of last year was 60.6955 trillion yen, about 544 trillion won, and the valuation profit compared to the book value, 37.116 trillion yen, was 23.5794 trillion yen, about 211 trillion won. YCC, known as short and long-term interest rate manipulation in Japan, was introduced in September 2016 as a policy to set a range of interest rates fluctuation and purchase large amounts of government bonds to ensure that interest rates do not deviate from this range. The Bank of Japan also decided to abolish yield curve control (YCC), which was part of its financial easing policy, and to stop purchasing exchange-traded funds, ETFs, and Japan Real Estate Investment Trust (J-LITE). ETF and J-LITE purchases, which began in 2010, were actively carried out during the tenure of former Bank of Japan Governor Hirohiko Kuroda, who strongly promoted financial easing while supporting former Prime Minister Shinzo Abe's economic policy. Abenomics. The market value of ETFs held by the Bank of Japan in September of last year was 60.6955 trillion yen, about 544 trillion won, and the valuation profit compared to the book value, 37.116 trillion yen, was 23.5794 trillion yen, about 211 trillion won. YCC. Also, short and long-term interest rates manipulation in Japan was introduced in September 2016 as a policy to set a range of interest rates fluctuations and purchase large amounts of government bonds to ensure that interest rates do not deviate from this range. At this financial policy decision meeting, 2 out of 9 members voted against raising interest rates. As a reflection of this, The exchange rate of the yen against the dollar rose sharply. After this meeting, yen weakened. Bloomberg interpreted this to be due to the Bank of Japan dovish attitude and the fact that the possibility of further interest rate hikes this year was not mentioned. Yuichiro Goto, head of foreign exchange strategy at Nomura, said that unless Bank of Japan Governor Kazueda makes a hawkish statement regarding the interest rate outlook, the Japanese yen will be vulnerable to selling pressure.